Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.Exchange. What a drama today. The markets fell as soon as the markets opened. And because yesterday FIIs were net sellers for about 5,000 crore, so no wonder market falls. Globally, there was no problem. And most of the Asian markets were higher, but this is India-specific selling. The morning, the markets fell so much that, number one, Nifty hit the swing low. It went very close to the swing low, but it did not break. But breaking 22,800, about 10-15 days before, Nifty broke 22,800, then recovered all the way to 23,800, a 1,000-point rally. That was a pre-budget rally of 1,000 points. That entire 1,000-point rally has been wiped out, and today Nifty came and broke 22,800 once again. And number two, the mid-cap, small-cap, Nifty Junior. All these indices were down more than 10% in just 3 trading sessions. Monday, Tuesday, Wednesday, 3 trading sessions, 10%. Then I tweeted in my Twitter that, in the past I have observed many times when this kind of brutal selling happens, and 3 days, everything will be over. There will be nothing to sell on the 4th day. Even I remember, even during Lehman Brothers collapse in 2008 also, the entire thing was over within 3 days. Right? So I said, the markets are likely to stabilize around this level, but markets were waiting for the mutual fund data. And because one side FIIs keep selling, if other side retail people stop paying money to mutual funds, then the question, what will happen? The markets can collapse. But later in the afternoon, the AMFI, Association of Mutual Funds India, data came that the retail people subscription is really very good. That is close to 40,000 crore. So that means, it's about 2,000 crore per day. A domestic mutual funds will have a firepower to defend our market. Once this data came, the short covering set in. The short covering was so powerful, Nifty shot up 350 point. Bank Nifty fell 800 point, again shot up 1,000 point. And then again it fell, that's a different story. So it was a hugely volatile market. Now, okay, first let us look at a little bit longer picture. The first Nifty hit all-time high 26,300. From there, it fell 3,000 point. After falling 3,000 point, it retraced exactly 50% to 24,800. Then after that, market came down and broke that level. 23,300 level was broken. It fell another 500 point. So that was the first fall and the first retracement. Second time, Nifty broke 22,800 and then reversed from there. And that was a pre-budget rally, went all the way to 23,800, right? So that is exactly 1,000-point rally. And because during the retracement period, Nifty went to 24,800. From 24,800, it came to 22,800. That was a 2,000 point. So exactly, again, 50% retracement is 23,800. So this Fibonacci is a very, very interesting concept. And once it touched 23,800, again the selling came, and then post-budget, the entire 1,000-point rally has been wiped out. Right? Now the question is, the market took support once again at the lower level and then reversed. Then how far it can retrace? So we have to wait and see. But at least we can say for the time being, since the last fall is about 1,000 point, 500 point away, there will be a resistance. That resistance is at 23,300. So that is number one. Number two, for the short term, today, the Nifty, you look at the opening price and the closing price is almost the same. and there was a long leg on the downside, the wick, or the people say wick. The body is very, very, very small. The wick is very, very long. So this is called long-legged Toji pattern. So Toji pattern means what? So Toji pattern shows indecisiveness of the market. Whether the market want to go up, want to go down, do not know. Whether the bulls are winning or the bears are winning, do not know. This is an uncertain. But one thing will be sure, from here the market will take one direction. Right? So this is the general interpretation of this Toji pattern. So today the market closed at Toji pattern. Right? So, the probability of market making a bigger move during the next few trading sessions is very high. That's number 2. Number 3, the put call ratio on weekly options is at 0.63 or 0.65. Usually markets bottom out around this level. But once again, nowadays, we cannot discuss the put call ratio so clearly. That's because, like monthly, people don't trade nowadays. Monthly, people don't trade. Everybody trade with a very, very short term. So very, very short term, it's very difficult to predict, right? But even the monthly also, the put call ratio is less than 1. So the probability of market going higher is slightly higher here. After the markets close, the inflation data came. So the inflation data came much lower at 4.31%. So remember, 4% plus or minus 2% is the RBI comfort range. But with this 4.31 data, if all else go well, if there are no big problems globally, RBI can cut the rate once again in the April policy. Right? So that is something good for banking stocks. But last RBI policy, no, FII is just ignored. Okay. Last but not the least, so tomorrow the direct tax code, something is going to be tabled in the parliament. But of course, that has not anything to do with the policy. It's only the routine procedures and this and that. But who knows? So if the government plans to change some of the things, like, a long-term capital gain tax or short-term capital gain tax, something in the direct tax code, which is to be placed in the parliament tomorrow. So that can come as a pleasant surprise for the markets. But although the chances are very, very low, because if anything is there in the policy, they would have announced it in the budget. They would not be putting it into the DTC. So all in all, the drama is continuing. One good thing for bulls is that though Nifty broke 23,000, it closed about 23,000 today. So this I've been saying that 23,000 to 24,000 is the range for this month. But this very, very bad that it did not only broke 23,000, it actually broke 22,800, but recovered later. So US markets are waiting for consumer price inflation data. Accordingly, the markets will be reacting in US. But why to bother about the global cues? So we have nothing to do with the global markets. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.